and the open rates are indicating that we could be in for a green start. A rub of green is something what markets want, but I'm afraid it is not a rub of green. It's a gap down start with the positive breath. It's a 5% downtick for the IT index, and that's largely because of the weightage adjustment. The TCS and Infosys, if they both on the same side of the trade, IT goes down. I mean, it's a simple point to bring up. Bank index or the bank Nifty will be off to a great start. Why? Well, it's because of, thank you, HDFC Bank. Reliance is off to a good start, but Infosys is where the collateral damage, I think, is visible. 10% down for Infosys. You don't see a stock like Infosys fall 10%, and this is a stock where I think the selling is not done yet. Numbers have been poor, pathetic, horrible, and they will force everybody to derate the stock. The street is derating large cap IT, and it is derating large cap IT quite vehemently. You got a 3% decline for TCS, you got a 10% decline now for Infosys. Meanwhile, HDFC Bank, Kotak Mahindra Bank and Reliance are looking strong. I want to look at AU Financials. That was the star on Thursday, hit out of the park. Sanjay Agrawal's extension from expected 2 years has become 3 years, but that also is consolidating. Power Grid, Dr. Reddy, Eicher, nothing meaty in the market per se. It is adjustment of numbers which I think is very visible. I would say watch out for Tech Mahindra. Their BSFI exposure is low. If the problem is with the BFSI space, then companies which have a limited exposure to BFSI, they will start limping back to normalcy. Companies which have high exposure to BFSI, Mindtree, LTTS, some of those companies in a sense will be in a spot of bother. And HDFC Bank also, by the way, is not reacting to numbers. It's down 1%.
It's actually fallen. So HDFC Bank as well is now down about almost 1% after a bit of a positive start. There's a block deal in Z, so I think that Oppenheimer deal has happened. There were reports indicating that they're looking at selling that 5.6% stake. So just look out for that counter as well. I don't know if we can bring up the volumes that we're clocking right now in Infosys, because the selling, remember, is also coming on the back of huge volumes. Kunal was just highlighting earlier as to how the pre-positioning ahead of the numbers. Remember, on Thursday itself, you had Infy down about almost 2%. So the selling is coming on the back of bigger volumes as well. And not just Infosys, it's pretty much across the board. The Nifty IT index alone is down 6% as we speak right now. I don't recall the last time the index alone, or rather index itself, was down 6.5%. There you go. That's where the Nifty IT index is. Pretty much all the composites of the Nifty IT index are bleeding right now as we speak. TechM, LTIM, Persistent, Forge, they're all the top laggards today. On the flip side though, Power Grid, SBI Card, Eicher Motors, Kotak Bank, DRL. But I must point out that, the IT weakness aside, there's no relative strength either in the market. Your biggest gainer is Eicher Motors on the index, which is also less than 1% higher right now. So that's not really indicating too much inherent strength. But Kunal, you're better placed to comment on this.
Yeah, so I think it's a zone for the markets, Aisha, where the markets will have to digest a lot of different trends emerging, whether it's HDFC Bank on the upside, whether it's Infosys and IT sector downgrading, or maybe some pairing of positions over there. So we may probably see another couple of days where the markets may go into this adjustment mode, and that's why I think trading the index and finding out direction in this kind of a market would be a lot more difficult. So that's why we probably reduce the trades and look out for more of the patterns emerging. The stock which I would be looking out to trade at the open would be on Tata Chemicals. I think that looks attractive at the 1020 odd mark, and now confirming a breakout on the short term chart. So would be a stock which I would suggest to buy.